Now, Mr. Chhatwal, let me ask you, what's happening in the bond market? Bond issuance is telling you that risk appetite is on the cusp of being unleashed at this point in time. What's the sense that you get?
No, thank you. Thank you for inviting me, Shereen. Yeah, bond market, I think, has been a bit of a challenge over the last 18 months. And this happens typically I mean, this is bond market, and we have a lot of bankers here. So I think it's a trade-off. Usually when the interest rates are going up, the banks are cheaper, so there are less bonds. But the other way around, when that happens, the bond markets pick up. So I think we are, over the next 6-8 months, coming to a situation where we will see interest rates peaking out and coming up. But I think it's a collaborative partnership with the bond markets. Really over the last few years have matured significantly in terms of the investors who are coming in terms of the quality of paper which is coming into the bond market. I think we are with the whole this whole infrastructure financing. While today banks are doing the heavy lifting, but we today are creating building blocks within the bond market for that growth. The REIT the regulation, I think, was a tepid one when it initially came in. People didn't want to kind of the first to happen, and then it was silent for a long period of time. But today, when you look at how the infrastructure is being built up in the country, I think REIT InvIT is possibly the best thing which has happened to the country. You could, while I understand what Mr. Shankar Raman was talking about, the headwinds in contract, etc. But I think from what we've seen 10 years back or 15 years back, when we saw the infrastructure build up with all these BOT projects and huge amount of losses and projects coming down, I think today what we are seeing is a much cleaner build out. By and large, and I will step back from what Mr. Shankar Raman said, by and large the contracts are fairer. We have some of these tested in a court of law where at least you have some judgment comes in, at least the cash flow starts. We have a situation where vehicles like REIT InvITs kind of, I mean, Mr. Khara said that it's a largely debt-funded investment. The moment you put into a REIT InvIT, it automatically comes to 50-50. So, and you have a retail participation, which is picking up. Obviously, initially it wasn't there. So I think that regulation per se personally think I would really revolutionize that, and the bond market will have a role to play there. Some of the areas we think it is something which we like to see develop on that is the secondary market liquidity. Today, I think we are having a challenge in the bond market that the liquidity in the secondary market is not enough. We had government talking about a credit guarantee corporation. Like today, when you have shocks, we have the government of India coming in and doing repos and kind of, but on the corporate bond side, we don't have anything. While I don't want to get into the legality of it, but we had a large mutual fund having problems with credit funds. But in the end, every single paisa got paid. And most of the ratings there were A and AA. I think what we are seeing today in terms of the quality of ratings we are seeing in the A, AA today are far superior than they were 20 years back. So I think all of that, and the fact that we have international investors coming in, many of the REITs investors are owned by pension funds, and those, all of them are putting in money. The governance levels are very different. Yeah. So I think a healthy time for the bond market.
This China Plus One is something that everyone is talking about at this point in time, and we have seen a fair amount of the benefit of this China Plus One go to countries like Vietnam, etc. The expectation is that India will do better, and we should not miss out on this opportunity. What is the fear that you have, and what are the risks involved in actually being able to realize this opportunity, this potential?
I think in terms of manufacturing competitiveness, I think India still has much better access to raw material, particularly steel, compared to Vietnam, Thailand, etc. Also, India has a good workforce and is also in a better position to manufacture high value-added technological products better. I think the export infrastructure, ports and the overall infrastructure, as that, that needs to pick up, and I think as that picks up, India can do a lot better compared to these countries. But I think overall, India is in a far better position than some of these other countries that you mentioned to take advantage of the China +1 strategy.
Mr. Gupta, let me ask you, in terms of the action agenda for change to build on the reforms already taken, since we are talking about the next decade, the next 20 to 25 years, what is it that you would like to put on the table by way of change?
While the linear growth, which all of us are talking about, infrastructure, manufacturing, exports and all of that, I think it has to be supported by non-linear growth as well. Otherwise, it won't happen. And the non-linear growth, in my view, is the whole internet economy, which we are seeing, the way the digitization of infrastructure is happening in terms of the internet infrastructure. We are seeing how the smartphone penetration or the now 5G coming in, leading to new businesses getting generated or the new investments coming into the country. I think that is, in my view, will give a clear boost to or a fast forward growth to the $40 trillion goal. Around like what reforms one needs. I think, in my view, the way the new age companies can be supported by the government in terms of the easier investment coming into the country or the easier exits when investors look for the taking capital out of the country from the exits which happen in India, the tax regime which happen here, or even for that matter, like we see already the lot of retail, the institutional capital which is domestic. Like today we are seeing the stock market is all-time high. Like if we give some sort of incentives to this capital being invested in the new age companies, like the way you give the tax breaks if you invest back the investment, the gains into the companies. I think if we can do something of that sort.
Perhaps not the right time to ask the government to do that when you're seeing new age companies lose 10 to 15% on a daily basis. I don't think the government has that kind of risk appetite at this point in time, but I get the point.
I think Shereen, it's like in any economy, I think, or at a long period of cycles, is very common. If something goes up 1000x, it's bound to come 500x. But the net outcome is still positive.
That's why you have venture capitalists, right? Who are willing to write those large checks and wait by patiently.